to me, considering that any day I could be fired because the competition, the demand, and being the only foreigner in Beijing office was quite scary. And I always thought like I need to prove myself. I need to work harder to just not to get fired. And that fear, I would say so, prevented me from taking the traditional path, saving up, get a loan, get a house, and work. Because I didn't want to be trapped in the mindset of owning someone money. What if I lose a job, right?
Hello everyone and welcome to the Hashlabs podcast. Today's episode, we're going to talk about how Alen Makhmetov, our co-founder and partner, went from Glencore to Bitcoin mining. This is a big transition, and of course, it has a lot of similarities between these two. And we're going to learn about this transition that Alen went through and how he started his career and went into starting Hashlabs. So it's going to be a very interesting episode. First of all, Alen, welcome to the podcast. And can you give a very brief introduction of yourself?
Hi, everyone. Thank you for having me, Yaron. Happy to be here. I'm a business partner of Yaron, and we endeavored in Bitcoin mining world. I would say maybe even the energy world. My background comes from a bit about oil and gas and commodity trading. And now we trading energy for a valuable asset.
That's great. So first of all, we're going to do a deep dive into Alen's background and worldview. So going to ask a few questions about basically his background as a commodities trader in China, what happened. So first of all, Alen, can you walk us through your background from studying industrial engineering in China to working as a commodities trader in Beijing?
Yeah, that's more than a decade to cover. But in short, when I was 17, of course, came to China, learned the language, chose my first bachelor degree in automation and electronics. Later on, I realized working on the production line that is quite boring and quite specific. So I went to do my master's at Tsinghua University in industrial engineering. And one of the reasons why industrial engineering is because it's a very broad type of knowledge-based kind of education. And I thought that that's actually fits me more. After that, I spent 2 years in the small province in China where actually oil started and worked at the Petrochemical Design Institute, dealing with refineries, LNG, and other technologies, all oil and gas related and petrochemical. And one of the projects that we had to deal with was doing a feasibility study for ferroalloy smelter for outside customer, like a foreign customer outside China. And that kind of experience landed me a job at Glencore in Beijing office. So my trading career began. And yeah.
So how was it like to move from Kazakhstan to China and to a small village in China in the oil province? Can you talk a little bit about that? And did you have a goal from the beginning to get into commodities trading, or was that something that just evolved?
I would say as a young graduate, I only had a one thought that get hands-on experience on the ground, so to speak, not just go to the office and be white-collar employee from day one, but actually go outside and experience everything. And I think that was the right call because I was really working alongside with engineers. I looked at the flow charts of any processes in the refineries. And yeah, I think it was quite shocking, but the mindset was very optimistic. Whatever I saw, I still remember it as a positive experience, even though the environment was maybe rough and tough.
Yeah, and this is also something I recognize with Alen as we work day to day. He's very, very obsessed about small details. He is an on-the-ground guy, and even when we start repair center in Ethiopia, Alen is there. He trying to learn the repair processes and actually learn himself how to repair the machines. And this is great because it enables him to understand exactly how the on-the-ground team operates and their challenges on a day-to-day basis. And I absolutely believe this is crucial for a Bitcoin mining company to have this kind of founders. So what did it?
Thank you for your kind words.
Let's move to when you started as commodities trader. You had the oil and gas background at the Petrochemical Institute. that enabled you to visit a lot of oil and gas plants, ferroalloy plant, as you said, that enabled you to work for Glencore. So how did you transition into Glencore as a commodities trader? And what did a typical day for you look like there?
That transition happened overnight, so hard to really connect it. It was a very drastic change um, from like factory, a typical quiet day in the design institute where everyone's just staring at their laptops or computers and design things. And now you're in a largest company in the world that, operates globally. So it's all about first learning, just doing the contracts, understand, like picking up the rope from every team member who's responsible for some parts of the businesses. But over time, it evolved into communication, a lot of travels, of course. The weeks we spent in the office is usually about, data entry, modeling. And what I've learned is that you're not just doing your small part. You have to know everything from upstream all the way to downstream, meaning, uh, meaning that you have to really watch every section involved in the trading up to the production of the final product and the consumers. And as an example, from the mine, shipping, ports, logistics inland, the ferroalloy smelters themselves. What about their logistics to the steel mills? What about the steel mills all the way and what they're facing, right? What about the energy sector that actually connects all of them? And what about the steel mills downstream demand, which is the real estate sector, construction sector, or infrastructure sector? So yeah, we had to stay on top of the things and see how it translates into everything else.
So a lot of learning very quickly. And I guess you were kind of forced to learn extremely quickly and adapt because I can imagine in Beijing office in that time, China growing rapidly, exporting commodities around the world, importing a lot of stuff. That's a very ruthless competitive environment, and you were forced to essentially learn as much as possible in very short time and adapt. And this is also something I recognize in Alen and I admire about him. He's learning very fast. He is always listening and studying his environment, essentially, trying to learn as much as possible. And this is also a very critical feature in a Bitcoin miner or a data center professional, because this is a very fast-moving industry. So if you're not always attentive and trying to learn as much as possible, you will definitely lag behind and you will not be successful. That's something I also strive to do and are inspired by Alen to always try to soak up everything. It also requires a very good memory, which Alen also has. So yeah, and you were exposed to essentially the whole study of the supply chain for some of the world's products, essentially, when you worked at Glencore. Can you tell a little bit about like what countries did you mostly trade with in Glencore from China?
So in my particular niche, which was manganese ore, and essentially there's only 5 countries that have abundant reserve of that or the grade necessary to be seaborne worthy. These Gabon, South Africa, Australia, Brazil, and the supply came there, of course. So we traded with the largest traders or smelters. The buyers are the inland smelters in China. Basically, I don't know, 80% now of the world alloy production. Why alloy production actually very related to or very similar in many aspects what Bitcoin mining is because they are huge energy consumers with a constant consumption. And not many industries can say that, right? And just imagine that you have 3 transformers of 33 MVA, which is like close to 30 megawatts on each side, just to fire up those arc furnaces. And you have to smelt it like 24/7 pretty much on yearly basis until you do, replace some of the heating mechanisms inside the carbon cathodes.
Yeah, and what you say is interesting because that essentially is logical that you did the transition into Bitcoin mining too, a little bit, because aluminum production is so energy intensive, so it's a very similar industry. For example, I remember when I first started studying Bitcoin mining in like 2020, I read about Iceland, neighbor country of Norway, where I'm from. They essentially had a national strategy of using aluminum smelting to export their electricity. And I just thought that maybe it's more efficient to just use Bitcoin mining. But that's essentially what they also started to do. But of course, not on a national level, but a lot of people in Iceland started mining Bitcoin. Also, Norway, where I'm from, we exported a lot of aluminum produced with extremely cheap electricity. But of course, it eventually was moved to China and this whole industry, basically. Yeah, let's talk about the transition to Bitcoin mining. So when did you learn about Bitcoin? Was it while you worked for Glencore in Beijing? How was your time in Glencore, like while you knew about Bitcoin? I know you were very obsessed about Bitcoin. How was your kind of transition? When did you understand you should venture into Bitcoin?
I was still a student. That was 2013, but that's thanks to my sister, Alen Makhmetova. She's the one that was young enough to be in the circles of, first movers at the time. So that's when I first heard about Bitcoin. And 2014, when I started working as a new entry at the Design Institute, little salary, all my focus was on work or landing a job, then working, and plus lack of economical, let's say, financial background in this space. Bitcoin was just a thing on the charts. And even though I looked at the prices, that's all I did without even deep diving into it. But I was monitoring, and I had a consideration between getting my first MacBook Air, or buying my first Bitcoin at the time. Of course, we can look back and say, yes, I should have, bought Bitcoin, but then I still needed to work on my thesis at the time. So laptop was it. Yeah, it was. Over time, I think just when I was working already in the Glencore and looking how things develop all around me, meaning people's concerns. One of the things that kind of led me to deep dive into Bitcoin was because everyone was taking a loan from a bank to procure their first house, first home. To me, considering that any day I could be fired because the competition, the demand, and being the only foreigner in Beijing office was quite scary. And I always thought like I need to prove myself, I need to work harder to just not to get fired. And that fear, I would say so, prevented me from taking the traditional path, saving up, get a loan, get a house, and work, because I didn't want to be trapped in the mindset of owning someone money. What if I lose a job, right? And I was questioning why everyone does this, why everyone taking so much risk as well. So that's how I started studying about Bitcoin, why even people forced to buy houses and so on. So I'm like, the system is broken, and I would rather buy Bitcoin and keep my mind free of these constraints. Yeah. I don't want to be a prisoner of my mind, I would say so.
Yeah, that's fully understandable. And essentially, from what I can see, it's essentially two paths that led you into Bitcoin mining almost simultaneously. One is the background from the energy sector, I would say, in China. And the other is your, I would say, appreciation of Bitcoin and interest of Bitcoin. And these two eventually converged, and you decided to enter Bitcoin mining. Is that correct?
I remember I looked at the mining aspects a few times, maybe around 2019, and the economics of that was really not that attractive. It's not like the margins were huge, and mostly that was happening in China. So I kind of skipped and moved on. But when COVID happened, 2020, me and my family, we had to go. We were actually stuck in Germany at the time. Then in 2021, when I decided to close my chapter in China as a commodity trader, I had plenty of time in my hands to, focus on Bitcoin and maybe take a bit of a vacation, uh, to regroup, think what I want to do in my life. And of course, this Chinese exodus happened. That caught my attention. The first country was Kazakhstan to welcome everyone with a regulation. And I thought, maybe I can do it. Maybe this is a time for me to go back to Kazakhstan and invest and build something great. Little did I know, what I was endeavoring on. I guess the energy side of Bitcoin mining was shockingly similar to what I've experienced before, because when I was talking to the owners of ferroalloy smelters across China, the reasons why they had to build their own substations, high voltage ones. The reasons why the energy was so important to them and how they mitigated their operational tasks, because the industry is also capital intensive. Their inputs mostly affected by their output mostly affected by the inputs from energy and the raw materials. That's essentially 80+% of cost structure. And I thought that, okay, I know one or two things about it, and mining is a very interesting way of converting energy into something else, right? So that's how I jump into it.
So, what were the most important skills you learned in your time at Glencore that you now apply to Bitcoin mining?
I would say market intelligence, stay on top of the things at all times, and understanding every single element about your business that can affect it on many levels.
Yeah, so this is also, as I said earlier in the episode, Alen is constantly trying to soak up knowledge, and he's also pushing me to stay on top of things that going on in the industry. Sometimes you think that it's not worth the time to like do this kind of market research, but it's going to help you overall. And as Alan said, in Glencore, they push their traders to get information. And I assume that is how most large trading companies in the world operates. So information is very crucial, and it's essentially the fundament of a commodities trader. So my next question is, how does a commodities trader's view of energy, pricing, and cycles differ from how most Bitcoin miners think today? Because Bitcoin mining is an extremely cyclical industry, and a lot of commodities are that too, but are there any differences in how Bitcoin miners think about that relative to more people in more mature commodities industries?
I mean, energy is produced, is affected also on a global stage by its inputs. But cycles, I guess, in my previous job, the cycles were in real estate cycles, right? The construction, but also it was more importantly coming or stemming from the decision of central banks of China, what they're gonna do, how they're gonna stimulate the economy. And that was essentially the first signal. If you can read that through and speculate on that signal, you will know what happens downstream. Ferroalloys or steel mills, they're gonna fire up their furnaces. Developers gonna build more roads and bridges and skyscrapers, you know, or factors like did the new regulation in terms of rebars, because rebars in my case, they were using the most amount of manganese content in it. So that was a big driver of demand, you know? So if that changes, like now you have to build skyscrapers with this type of quality. So yes, those cycles were generally big cycles still from monetary thing, like the central banks and their regulatory framework where the economy has to go and how the China wanted to pivot that. Sometimes the focus maybe would be something else, or interest rates would increase, and then you would expect. I think mining is very similar as well. At the end of the day, our input is energy, and energy can be affected by many aspects. Whether there is a lack of finances invested into new generations, that will eventually affect your input, right? At some point in time, maybe there is some regulatory changes. So I think this is just very similar in a sense, and the cycles are always a global cycles, whether it's now America or the rest of the world, how they respond to the monetary policy that's set by America. So yeah.
So essentially, your view is to first look on the macroeconomics and the decisions by the big actors in the macroeconomic landscape globally, like America and China, and what they do, and then all of that eventually trickles down, right, to the supply chains. And so also I was wondering, so mining is extremely cyclical, maybe even more than most other commodity industries. So I know that this kind of operating in cycles is kind of going against our human psychology. You have to not be emotional at all. And it's usually smart to invest in when it's looking like it's not smart to invest, essentially. Of course, this is something most people in this more mature commodities industries understand, but whether they actually follow it or not is a different question. Do you think miners have something to learn from more mature commodity industries, how they look on the cycles, because yeah, I see that miners basically look at the payback period of machines, for example, usually when it's at the lowest point, like the shortest amount of months of payback, that's when everyone want to buy, but that's actually historically the worst time to buy, because that only happens if the revenue of mining is kind of artificially high and at a peak, and then it's kind of destined to go down. So I would say miners maybe not the best at operating in the cycles. Do you think we have something to learn from other more mature industries in commodities?
Bitcoin mining is the toughest business I think I faced. One of the reasons, I think, because of the design of it, the halving and the input, the energy costs. But then everything else is very similar how you run the business, right? Strive for efficiency, try to innovate, right? Try to be ahead of the headwinds that might appear. But then one of the things I didn't really expect in this business was how the governments and regulatory framework might affect your business. Because if everyone treated this business as traditional businesses, I think we would be very successful in many aspects, like industry in general, and it would balance itself out, find this equilibrium. But having this kind of unpredictable force, what governments might do, really forces us to stay on our toes at all times. This is one of the challenges I think we're still trying to navigate, and it forces us to really go global while our operations are very local, as Yaran usually say, right? So this is a very big distinction from everything else, and managing that, understanding where the industry is heading, because the competition in mining is like so intense that if your position is not like as long term as most people have, then you have a time limit when you need to really move to a new location, or think of something else, or think of an exit, or innovate to stay afloat. So I'm not sure that there are a few things that you can learn from traditional businesses, essentially how to operate the business. But mining is so unique that the challenges that it's facing is unseen anywhere else, I would say.
Yeah, like I can imagine that if you wanted to start a manganese ore mine somewhere, you would usually get support from the government, and they will not come and shut down your mine after 3 years, like, or increase your energy price or whatever, just because you are a manganese ore mine. But for Bitcoin miners, this is a real threat. And this has happened in many countries already, as listeners might know. It's very few countries where you could mine for, like, let's say 5 years plus without having some kind of government intervention in the business. Yeah, that's also explained, and basically what we talk about usually, Alan and I, is that what is so difficult with mining compared to other industries is that on the one side, mining operations are physical assets. They need to be located somewhere, and to operate in that environment is also very tricky. So you have to be very local and understand the local regulations, have local connections, understand how to operate on that local level, understand the local energy market, etc. At the same time, you need to have a global perspective, because in 3, 4, or 5 years' time, you don't know if you will be allowed to operate there anymore, or maybe energy prices will grow very rapidly in that place. That's impossible to know. So you have to be always open to move at the same time. And being local on that level and global at the same time is extremely difficult. And even massive corporations struggle with that. So that's a challenge of Bitcoin miners today. So question, how do you see Bitcoin miners making the biggest strategic mistakes in general?
I think the positioning and over concentration, um, and new mining facilities, really thinking very short term, just to capture quick profits. That would be a strategic mistake of entering into the space, because if you thinking short term, your time is like a couple of years. But when I say positioning, you really need to understand what are the long-term goals. Can your location, the way you position and all the factors involved in it, are they position you into operate for 5 to 10 years? Or then you have to, again, innovate or think of survival, right?
So overall, over concentration in geographic regions and as well as short-term thinking, I agree, and this is also what makes mining tricky, because you essentially have to have kind of a short-term outlook on each site. You know that, or hopefully the site will operate for 10, 20 years, but you have to be prepared that you have paid that site back within a very short time and get your ROI, and then you can move on if that happens. And this is also what is tricky with mining, because each bull market, you have a lot of opportunistic people coming in, and they just want this short ROI. But this is also a very weak strategic position, because this is so ruthlessly competitive industry, and the only way to actually compete with everyone who day to day have worked on this for many years and work very hard to learn new things and be innovative, the only way to compete against all these people is to actually spend a lot of time and be fully committed to this industry. So you have to be prepared to do this for many, many, many years if you really want to be competitive. If not, you will probably be wiped out in the next bear market. So what do you see is the biggest opportunities in mining right now?
Let's spill some special sauce and share our market intelligence. But the biggest opportunities, I mean, there are probably plenty, and it's a global market, and everyone has to find their position in it and how they want to really play it out. But for mining right now is for existing sites that can really integrate into AI and combine it together, because even many AI centers, the way to balance their operations, they often have to complement it with mining that helps them utilize the excess energy or help them avoid shutdowns, right? And now the mining actually goes into this country level competition that many countries are revising their prior decisions and trying to welcome the industry. So I think these opportunities are popping up all around the world. You just have to be prepared to be flexible enough and tackle them.
So essentially, it's about integrating mining into, like, as a tool in different industries and processes, right?
I would say so. Yeah, mining has to. So me and Yaran discussed this quite a lot, and we really believe mining needs to be, as Yaran always say on his publications, it's a tool, energy tool, right? And we just need to use it in the right way, in a setup that not just exploits the environment, but harmonically or in harmony gets integrated into the local society's lives. And I think this is a way, and that's how many opportunities lies.
Yeah, for the listeners, an example of such an integration is, so we are mining in Finland, and in Finland, it's essentially very difficult to mine if you don't sell the heat. So the electricity prices in Finland are okay, but they're not competitive relative to some other places in the world. So, but if you can repurpose the heat and sell that heat, you essentially get an offset in your price per kilowatt hour that allows you to have a very good marginal cost of production, essentially. So in Finland, we see this already, that the only way to mine successfully in the long term and be competitive is to integrate in the energy industry and provide some service. And this is also something we see in America. Miners are doing demand response. They shut down if needed by the grid. They get paid for that, and that allows them to operate in these electricity markets. And as you said, Ellen, using mining as a tool to transition to AI, this is of course very interesting. We also see the miners, especially in America, doing that, also in Norway, and it's going to come to more countries. They essentially get control on powered land via mining, so miners can move very fast. They can secure access to land with access to power to that land, start monetizing that power extremely fast. And then they have built up the basic infrastructure, secured control of that land, and then they can transition it to AI if necessary. So this makes mining a very interesting industry to also for energy companies, I would say, as a tool in their toolbox. Of course, they're not at the moment so interested in mining because it's such a small industry relative to the enormous energy industry overall, which they operate in. But they definitely need to study mining and understand how they can use it as a strategic tool in some cases. So, yeah, Alen, do you have more comments to that?
It's just that sometimes when you It's so broad that some thoughts popping up in my head, like in different aspects. One thought was like, okay, many years ago when mining wasn't that popular, essentially, yeah, the China ban essentially forced everyone to move out. But if you look at the mining economics at the time, the gross margins were so negligible or like so thin that you would not really be excited of even entering this market. Nowadays, margins are squeezed out too. So that also allows you to see information, right? Once you understand who's the players, where's the hash rate is located, also the cost curve of that. So your position within that cost curve is critical. Because yes, market right now is in, let's say, kind of a bear market. And do you exit now or you stay afloat and continue? Right? Because there's many more facilities that may be even less efficient than you. So there's one thought. Sometimes I think maybe hash rate is oversupplied. That's how it happens in steel industry or ferro industry. Prices for the metal is good. Everyone is turning on their furnaces. Market is bad. Furnaces that quickly switch off, which is also costly to do. And then people innovate, they stay afloat, then the bull market starts again. They the first to take advantage of that. Once price rise and recover, you have this called swing capacity. They are coming up online too, or furnaces burning. Then again, the oversupply happens, and so on and so on, and that's on repeat. I would say in traditional business and for mining as well. Like right now, we just have to see who call it quits, to see what energy dynamics on pricing and development happens, because this is anyway going to be 5-10 year horizon for any facility. I like what's happening in America in terms of like gas prices, even finally having those big LNG exports were driving local natural gas prices up. Now you see policy change. You have more supply of gas locally from the wells. Industry is, let's say, growing. So that affects your energy structure in America. Policy welcomes that. When maybe a couple months ago we thought, okay, hash rate in America would shrink because cost is rising. But then things change so quickly that you realize, okay, in America maybe things are going to be still quite efficient. Then you have countries in Central Asia coming up with a welcoming stance on mining. You have Pakistan allocating 2 GW of energy. You have maybe other countries in Africa that is like trying to copy Ethiopia. And also we've learned that there are countries with great potential to monetize that energy, and this whole global awareness helping us to promote Bitcoin and Bitcoin mining, and probably some new doors going to be open somewhere. We just have to be on the watch and speak to people, broaden our network, and be the first one to, establish a good working relationship with such countries and locations. One of the biggest trends I think we've discussed is the government's mining and energy producers integrating this tool in their portfolios more and more.
Yeah, that's interesting. And it also aligns with what I'm thinking. And what is very interesting right now is that I think it's the only time in the last, let's say, 5 years in mining where we don't have one specific country that is like soaking up hash rate and growing very fast. It was first China, America, Russia, Ethiopia, Paraguay, but now none of these are really growing anymore. Of course, as Alen said, America, they might come back. Of course, they're still extremely big in terms of hash rate. I would like to ask you more. Maybe there will come one new entrant, like Alen mentioned, Pakistan. We have also some countries in Southeast Asia that are interesting, some African countries as well. But of course, in many African countries, the grid infrastructure is quite undeveloped, and a lot of them have very difficult regulations. But yeah, some of them might come. I would like to ask Alen, because Alen speaks Chinese fluently. He has worked and lived in China for 16 years. What is going on with China Bitcoin mining? Because everyone seems to just like say in one moment, oh, it's growing, and the next moment, no, it's now going down. What is happening there?
I mean, yeah, they banned it. I know, interesting back in the day that Chinese are so entrepreneurial that in the southern area of China, where they have a lot of hydro, people just built coal power plants just for the sake of mining. And when that ban happens, you could even see on the Alibaba or Taobao.com, like power plants being sold or hydro locations, hydro mini dams were being sold. And you're like, what? So I would say a couple of gigawatts of energy during kind of like a energy shock in China at the time that was caused by the the confrontation with Australia because of the coal. And it's fascinating that that energy build out was eventually connected to the grid. And now what's happening is that, yes, some stands got softened, maybe more regulation on that. They're provinces with autonomous power, which is Xinjiang, Ningxia provinces, Inner Mongolia. There you still have pockets of energy surpluses because even though China has one of the very efficient grids and they're a leader in ultra high voltage transmission lines on the direct current, and they're able to move the energy all across their grid. But still, there are pockets with energy surplus, and provincial level governments, they really incentivize someone to come in, consume that energy, make sure that thing. Recently, Xinjiang and Inner Mongolia, there were some sites operating, but what we've heard about China is that there is no longer confiscation of your mining equipment. They are treating it as, they would come to you and quietly say, okay, if you're not allowed to mine here anymore, for whatever reasons, maybe a central government inspection is coming, then you please move. And they are kind of asking you nicely compared to previous cycles. So I think the mining in China will continue. It's a big country and deals are still being made. I wouldn't be surprised if China is mining as well as a government.
Very interesting.
And considering that there's economic slowdown in China, some of the products might have to relocate and factories. Imagine that decrease in consumption in some of the areas. And for energy producers, they would need always to have a customer that can soak in. So I think mining will still play its role in China. Maybe one day they're going to completely open it up and make their grid even more efficient because China is known for making data-driven decisions.
Yeah, that would be maybe the biggest problem for miners in the West if China just opened up for mining. Especially when you look on the history of industry, let's say in Europe, and I can see it even in my home country, Norway, even the energy-intensive industries in Norway, which we theoretically should be competitive in because we have very cheap electricity, even they move to China. Just because that small portion, let's say this 20% of the OPEX that is driven by the employees, even that is just so high in Norway and the West compared to in China. And as well as the supply chains, of course, like you want to have access to the materials. Like in China, everything from mining is coming in some way from China, originating there. So, of course, we have pretty good supply chains in the world right now. But if they opened up for mining in China and they could get a reasonable electricity price, of course, it would be more efficient to mine in China than in the vast majority of the world. So it might be very difficult for a lot of miners in the West to compete if that happens. So we will see if it happens or not. But in any case, it seems like mining can still play a very important role in, I would say, China's electricity sector and energy sector. So yeah, they will continue to have hash rate. What about Alen also? He's from Kazakhstan. In Kazakhstan, everyone speaks Russian. So Alen also speaks Russian. He pays attention to what is going on in mining in Russia too. What is going on in Russia? Hashlabs published a report on mining in Russia about, I think, 1 month ago. So people can go and read that if you want. Can you explain what is going on with Russia in mining?
In short version, they adopted the regulation that Kazakhstan did with some modifications. That regulation, of course, has limitations, constraints, and I think mining industry there is also in a downward trend at the moment, or let's say in a rebalancing. Secondly, this regulation really increases to some extent the cost of operations. But two, Russia is not yet gone into the way like the West has, where you have long-term contracts, energy contracts. So things change too fast. You can't really predict your power prices even beyond the 1 year because the government and the energy producers can change that at least with inflation adjusted levels. And I think a couple of times a year as well. Number three, I think ruble is one of the challenges in operating in Russia because ruble performance is quite extraordinary to some extent. It got so strong. So everyone is really operating at close to 7 cents in Russia. But nowadays, people who wanted to stay afloat operating at 70% capacity. And I think most of the locations are, because 70% uptime gives you very substantial decrease in power prices because you really avoid those peak hours. And machines like S19K Pro still have I don't know, 5-10% gross margin left in them at 70% uptime. And energy is also moving to gas, but gas also very tricky. It's a very capital intensive process as well. As you probably know, Russia struck deals with China to redirect its supply, and most likely gas prices also going to adjust upwards. Gas could be subsidized or prices could be lower for the domestic consumption, but if the most of it going to be oriented exports, then and miners try to come in and soak it, then it's naturally forced to go upwards for gas prices, right? And the regulation itself, I think it's very understandable how post-Soviet Union countries operate because they want to have control, oversight of everything. That is why these regulational type of structure being created where you give them your wallet, your watcher link. It's so advanced that I haven't seen anywhere in the world. People say it's a good thing, but I think it's a bad thing. Why do
It's
we
the
have to
only
be
thing.
over?
It's the only thing governments are innovative at. It's regulation and how to collect taxation, essentially.
Absolutely. So I think we in finding our equilibrium, like the hash rate that can survive this time and that will stay online, probably positioned very well.
Yeah, it seems like in Russia, just like we showed in our report, you can find it on our website. There is a chart showing basically the electricity production of Russia, and you could see that it went actually downwards. It was on a downward trend for many, many years, basically since the end of the Soviet Union. Because after the Soviet Union, or after it collapsed, there was also an economic collapse of all the post-Soviet countries. Basically, the factories, everything just closed down, a lot of it, moved to China, and they had a big surplus with that existing infrastructure from the Soviet Union. Of course, the infrastructure also declined over time, so they haven't really maintained it as properly as you would expect because they didn't really see an increase in electricity consumption, so they didn't really need anyways to keep investing in the substations, in transmission lines, etc., and power plants. So what we saw, especially after COVID, was miners moving into Russia, growing their capacity a lot, and essentially they consumed already that surplus that was left over on the Soviet-era infrastructure. I think it's not a coincidence that they stopped the growth right now, because it seems like it's kind of already monetized that surplus and there will be little room for the industry to grow. That's also what happened in Kazakhstan. Once the miners had kind of consumed that surplus on the grid, and even a bit more of that, then the government had to take. Yeah, last questions. What advice would you give to someone coming from traditional energy industry or commodities trading who is considering entering Bitcoin mining right now?
Traders would use mining as not as operators, but they might use hosting provider services just to get the hash rate on. I think mining Bitcoin would be very complementary to trading Bitcoin. I've used it myself. Miners can use trading platforms to hedge their production as well. That's quite useful. You don't really have to, overcomplicate it, but it's quite complementary. Energy companies, they should really think twice, but then they are well positioned to take it to the next level. And we're here to help as well if they need our advice, how to integrate this energy tool in the energy producers or energy companies' portfolios.
Okay, thank you very much, Alen. It was a very good conversation, and we will have more of these conversations. So this is the first episode of the Hashlabs podcast. In this podcast, we will interview industry leaders, thought leaders, people who have something to share about mining and energy industry and the future of Bitcoin mining, as that's what we're really focused on understanding. We will publish one episode per week, so please subscribe to our podcast and you can get this podcast updated. Yeah, so thank you very much, Alen.
Yeah, and thank you for having me. Yes, this was our first podcast, so there is more polishing to do. But as they say, practice make it perfect. I'm looking forward to more episodes and really insightful discussions, genuine one, and we can all contribute and share knowledge and our experience with everyone.
Perfect. Thank you to all the listeners and see you in the next episode. Bye-bye.